Hey guys, welcome back. It's Jeb Smith, real estate broker here in Southern California, along with Josh Lewis of BuyWise Mortgage. Typically, we do these videos planned in advance, but tonight we're doing a live stream that's more or less on an urgent matter that was just released from Fannie Mae on a loan level price adjustment, if you will. Now, this is going to apply to all refinances, and I'll let Josh get into the details of that. The reason we're doing this on an urgent basis, if you will, and releasing it tonight versus just waiting until tomorrow is that this could impact loans that are originated as early as tomorrow. We don't really know that, and Josh is going to discuss that, but I've been talking a lot about refinancing, about interest rates over the last couple of weeks, and a lot of you guys have reached out to me to ask questions. And so, you know, as Josh and I have always said, we're here to provide value and to help guide you through that process. And we thought there was no better way to do that than to give you information that is just released. So with that said, Josh, let's get into it. So you basically sent me the memo, if you will, and I'll let you just take the lead and talk about what it.
Yeah,
I'm
gonna pop it up here just so you can see. We'll make us a little. August 12th here today, after hours, Fannie Mae releases this. We haven't seen an adverse market fee on any loan since probably 2010, 2011. Most of them got taken away. That was after the last downturn. So basically what Fannie Mae is saying is, in light of market and economic uncertainty resulting in higher risk and cost incurred by Fannie Mae, we're implementing a new loan level price adjustment. And basically is the criteria: transactions, limited cash out refinances, cash out refinances. And there's an exception here that will apply to almost no one. So if you're refinancing, you're going to have a half-point loan level price adjustment. It's a weird term that doesn't mean anything to anyone outside of the mortgage industry. And it just says the best example people can understand: if you take cash out, there's a loan level price adjustment for cash out. So you get a slightly worse interest rate. So this is a half-point loan level price adjustment. It doesn't mean you get a 0.5% higher interest rate. It means you're going to get about 1/8% higher interest rate. And why is that important? You and I have been talking on all of our videos, separate and together, that rates are at all-time lows. We've seen week after week after week rates at all-time lows. In the last week, since Freddie Mac's last announcement last Thursday of their weekly primary mortgage market survey, we've seen bonds sort of give back maybe about 1/8% in interest rate. So if this is implemented tomorrow, that's another 1/8%. So your neighbor that locked last week versus you locking this week, if you're otherwise identical, you're probably about 1/4% higher in interest rate. That means that interest rates are still fantastic. So when we say this is urgent or important, there's a couple things I want to be super careful to tell people about. Is that it's not the end of the world. 1/4% higher rate is not the worst thing you could face. It's not the best. And then what you and I are going to kind of bat around right now is, what are the unknowns? What do we do or not know? So this right here says effective date: whole loans purchased on or after September 1st. Usually when an announcement like this is made, they say loans originated after. FHA loans would be case numbers assigned after. This says the loan has to be purchased. So if you call me tonight and say, hey, let's get going on my refinance, even if we could close by August 31st, it's not going to get sold to Fannie Mae and purchased by that time. So that's one of the unknowns. Does this mean, what happens to loans that are locked right now and don't close by the end of the month and aren't purchased by Fannie Mae? Does the investor that's making that loan or selling that loan to Fannie Mae, do they get hit, or getting it insured by Fannie Mae or guaranteed by Fannie Mae? That's unknown. We don't know that. So the second question is, almost every time Fannie or Freddie, either one of the agencies, makes one of these announcements, the other follows suit within days. So I would expect that right now we have a loophole for Freddie Mac. I wouldn't expect that to stay there. I would say here shortly we're going to have it. So that's really all we know. I'm sure you and I, once we get some more analysis and in the morning start seeing how all of my lenders are rolling this out, how other lenders around the country are rolling it out, and what they're doing with that, then we'll be able to give you a better analysis. But right now, that's what we know. It's Fannie only, Freddie likely to follow. Probably going to apply to anyone who's not locked, probably not going to apply to anyone who is already locked. Lenders can't really change the terms on your lock that you already have. So what I would say, I don't generally like to do this and be alarmist and say, hey, rates are going up, act now. But if you've been thinking about refinancing, if we're going to have a window here, if you want us to look at those numbers, or if you're talking to someone else, you want them to look at numbers, give them a call first thing in the morning. I'll put up my email address here. but email over your mortgage statement and what you estimate your credit score to be, and whether you're looking at rate and term or taking some cash out, because we may have a window here to protect people that are locked. Yeah, Cheryl just popped up here with the comment. We would certainly think that anyone locked will be fine. They can't change the terms of your lock after the fact, but the way it's written and the way I'm reading it, the lenders that have locked those loans, they're going to get stuck with a half-point hit if they can't get it purchased by Fannie Mae before September 1st. So with all that, Jeb, do you have any questions or thoughts on how this impacts your clients?
Well, I mean, you addressed a lot of the questions that I had without me even asking them. And that was, if my loan is locked, am I going to be impacted? What if I have to extend my lock at the end of 30 days? Am I just hit with, the extension fee to extend the lock, or am I then hit with this, this loan level price adjustment now as well? I mean, I know these are questions you can't answer, but these are things that I'm thinking of.
It's a great question. I hadn't had time to think it through, but that's a great question. That's the first I thought of it, you throwing it out there, and we'll have to get that answer.
And so another thing is, earlier today, I put a video out where I discussed, UWM, right? United Wholesale Mortgage just came out with offering this 30-year fixed at 1.99%, but it's a 3.631 cost. And so I did a breakdown, showed you, hey, what that rate gave you on a $500,000 loan and a $200,000 loan. And then I also gave the pricing at 2.875, with no cost, and showed you the difference in buying down a rate versus not buying down a rate. So, that cost, if you will, with say UWM at 3.631 might even be higher tomorrow because of these new adjustments, because they have to be, they're impacted as well. So it just goes to show you that, if it makes sense, which I've been preaching the whole time, if it makes sense and the numbers look good now, pull the trigger, right? I mean, I'm in the business. I'm telling you on every video that I think the rates are probably going lower, but yet I also told you that I refinanced, it actually just closed. I did a video on why I refinanced, and I told you in that video because it made sense. And so for me, the numbers worked then, and that's what I'm telling you now. If the numbers make sense, even if you think it goes lower, this protects you, right? This gives you an opportunity to at least get, what works now. And if they do trend lower, you have an opportunity to do it then. So I don't know if you've had any more time to think while we've been doing this, but that's,
No, I would just say the same thing. Before this announcement hit, I locked my refinance for my personal loan yesterday, just because where we were seeing, I do believe rates are going to go lower. But if you had asked me 2 months ago, I would say with pretty strong certainty, 75% chance rates are going lower, and possibly a good bit lower. Right now, when you have rates down in the twos, I could give you scenarios where they don't go lower. They're still great. They're not shooting to the moon. This is another little hit of an 1/8%. Again, it may be a good thing, because I say this, I want everyone to get fantastic rates, but the number of clients I've talked to over the last 2-3 weeks that have turned up their nose at a 2.99 or a 2.875 said, I'm just going to wait. I think rates are going lower. I mean, people with like 3.75, 4 1/8 rates that are almost saving a full percent, turning up their nose at that. So maybe this is something that will spur people to action. What you just said is what we've been talking about here. When it makes sense, do it at low to no cost. It doesn't make sense paying 2, 3, 4 points like some of these lenders are proposing you do, saying that rates are at an all-time low. Rates are incredibly low. If it makes sense, anyone saying, hey, hold off or wait, or I think this is going to happen with the elections, it's foolish. No one knows what's going to happen with the elections. Not only do we not know, we don't know what that would mean. We can sit here and assume, hey, Democrats are bad for business, taxes are going up, it's going to be inflation. Hey, Republicans, Trump is great for this, that, or the other. You can spin a story that The only thing we know for a fact is rates are great right now, and waiting when it makes sense for you is not a super smart move. So if you want to look at those numbers, I'm available. Jeb, you and I have connected probably 100 people in the last month or two with lenders around the country that can also help and run those numbers. So
do you want to click it back up so we're bigger? Sorry,
yeah,
to interrupt there.
No, by all means.
Yeah, there you go. Yeah. So no, I mean, for me, the telltale sign is when two people in the mortgage business, or I'm not in the mortgage business. I have been in the past, as I've told you in videos. I'm in real estate. I get, I don't have a dog in the fight here. But when you have two professionals in the industry, both telling you they either lock their rate or they just close their refinance, even though they think rates might go lower, that should tell you something, right? I mean, that would be for me a telltale sign to say, okay, these guys are saying that rates are going lower, but they're taking advantage of the market. So, again, we're here to educate you, guide you, provide you with information, and you guys can do what you want with it. But at the end of the day, it's all a numbers game, and if it makes sense, then that's when it's time to do it. I mean, a question has come up now, Josh, that I'm thinking about it. So we talked about Fannie. We talked about potentially Freddie, which it's going to happen with Freddie, right? Because they follow suit with each other. What about FHA? What about VA?
Unlikely, in the last downturn, they didn't follow suit with all of that. They do things more like changing mortgage insurance rates and upfront mortgage insurance premiums, adjusting things that way. So I wouldn't rule anything out, but I would say that it's unlikely.
Got it. Okay. Well, I mean, I think that covers the basis for most people. I mean, as we get more information on this, again, like Josh said, there's a lot of unknowns, a lot of variables here that aren't mentioned in this, and how it might affect. I mean, again, this could be implemented tomorrow morning, and it's too late to do anything about it at that point. But as we get more information, we'll do it. We'll mention it on the updates for this week. And if you guys have additional questions, comments, leave them below. Reach out to myself or Josh directly, and we can add it to the next video that we do. You guys are good about commenting and asking questions, and we always do our best to follow up and get you the info. So I'll let you finish up here, Josh.
I was just gonna say, we need to get a new banner that has your contact info. I know, especially when we're streaming on multiple channels right now, when it's on your own channel, we have that. It's easy for people to get a hold of you. We need a new banner that does that. But yeah, just the same things. This isn't the end of the world. It's not good. It's unpleasant and unsurprising. One of the comments here is someone, hey, the thieves want a piece of the pie. I look at it and I go, this just doesn't make sense to me. Like, as far as right now, Fannie and Freddie have not suffered from any downturn in the market. There hasn't been any big loss of loan performance. It does just sort of reek of getting ahead of something here that may be an issue, but isn't right now. So I don't love it. We'll get more information, and either whether you and I get back here on tomorrow or wait till Friday when we have all the information laid out, we'll be back, get you guys all the details. And again, it's not the end of the world. It's an unpleasant surprise here at the end of the day.
No, understood. Thanks for watching, guys. Reach out if you need anything.